Now, what do you mean by marginal cost? Now, marginal cost is also known as variable cost. Contribution, there are two formulas. One is sales minus variable cost. The other formula is fixed cost plus profit. Now, what is this break-even point? A particular point where you don't have profit nor you will have losses. You should always go with 40,000 divided by 40% because PV is not 40, it is 40%. So be very careful. Hello everybody, a warm welcome to one and all. I'm Abhilash Chandra from the Department of Commerce and Management in Vidhyaashram First Grade College, the Temple of Excellence. Welcome to all the students for the first session of the second chapter, that is about marginal costing. Now we need to understand what is marginal costing. Before that, I want you people to subscribe the channel if you have not done it, and please do like and comment because these are the things which will actually encourage everybody to do more videos on these topics. Now here when we go with management accounting, the second chapter is marginal costing. What exactly marginal costing is? Let me tell you here in nutshell. Marginal costing is a technique. It is a specific technique. Now why we are supposed to use marginal costing? To ascertain marginal cost. Now, what do you mean by marginal cost? Now, marginal cost is also known as variable cost. Now, variable cost, we have done it in our flexible budget, isn't it? Now, what exactly variable cost is? Now, cost which will change, that is the variable cost. So, here we have marginal costing, which will ascertain the variable cost or a marginal cost. That means if there is a single unit, that is one unit addition to it, or you produce it or you deduct it. So whatever it is, when you increase one unit or you decrease one unit, so there will be a change in the cost. So to understand that, we use this technique called marginal costing. So a lot of people have defined marginal costing in their own ways. Let's understand what is that London schools of business have defined marginal costing. When we go with this marginal costing, we are supposed to know with what marginal costing is, a technique of ascertaining the marginal cost. So here, as marginal costing is a special technique of costing, it is concerned with ascertainments of marginal cost. So what is this marginal cost? Now here, you need to understand by the definition of people who have actually coined what is marginal cost. So in the London management schools, they have said that the amount at any given volume of output by which aggregate costs are changed. That is, there is a change. Now, why the change happens is if the volume of output is increased or decreased by one unit. So that is the reason we are supposed to know what is the change if we add one product or if we delete a product or we decrease one unit. So that is called marginal costing. So let's go with the formulas. I told you that there are 5 formulas which we are supposed to remember. I'll give you the first 5 formulas, but I want you people to have your notebook with you, pen, so that you people can actually remember the formula, write the formula and understand the formula. So here students, I request you people to go with 2 things. The first one is you need to understand that you cannot remember everything. In the same time, you people cannot understand everything. So we need to go with a combination of where I cannot understand, I need to remember, and where I cannot remember, I need to understand. So it's a simple combination of remembering and understanding. Let's go with the first one. You start a business. Now, the minute you start a business, what happens is you know that where you are going for a loss, where you are going for a profit. Let's talk in terms of quantitative, because here in management accounting, we talk more about quantitative. The thing is, we can calculate quantitative, right? We can never calculate or measure qualitative. We can only grade them, right? We can't actually calculate it. So when you go with this quantitative terms, you will understand that you are making profit or you are making losses, right? So for that, we have a special technique. Now, through this marginal costing, if you start a business in future or you already have a business, you can find out whether you are actually running in a profitable or you are running in a loss thing. if you are running in a loss, what are the things which you are supposed to avoid, and if you are running in a profit, how to accelerate more and make more profit, you can understand through this formulas. So the first formula here which you people should know is, we term this as the first one, contribution. What is that? It is called contribution. So what is contribution? Understand, it's not about what is the contribution which you are giving to your business. Contribution means there are so many costs, isn't it? Now all those costs whichever you have incurred in your business, that you need to subtract it with the revenue, and the leftover amount is called contribution. That means you have revenue, isn't it? Now that revenue you are supposed to subtract all the costs. Now what happens? The leftover is called contribution. So what is this contribution formula is? We denote this contribution as C is equal to. Now contribution is denoted as C. Now C is equal to sales minus variable cost. Variable cost. So what is contribution here? The formula says C is equal to sales minus variable cost. Now this sales is also we take it as S, variable cost we go with V. So contribution is equal to sales minus variable cost. So this is our first formula which you are supposed to understand, right? So we'll write 1. But contribution is also equal to fixed cost. What is it? Fixed cost plus profit. Fixed cost plus profit. The profit what we have and the fixed cost which we are supposed to pay. So fixed cost plus profit. So here what happens is C is equal to, now fixed cost is denoted as F and profit is denoted as P. Now this becomes the second formula. Now understand the formula here. Contribution, there are two formulas. One is sales minus variable cost. The other formula is fixed cost plus profit. Now combining these two, 1 and 2, because of 1 and 2, can I write something like this? That is C is equal to S minus V is 1 and one more is C is equal to F plus P. That means both are equal. Then what happens is, through this I can write S minus V is equal to F plus P. Can I write this or I can't? So this is what you are supposed to decide. See, when C is equal to sales minus variable cost and fixed plus profit, that means these two are equal. So we can go with the formula. So this is my third formula. So totally here contribution, how many ways we can actually go with? 2 ways. The first way is I'll go with sales minus variable cost, or I'll go with fixed plus profit. Combining both, I can write sales minus variable cost is equal to F plus P. Is it easy, students, for you to remember? Let's go with the second formula here. Now we are done with the first heading, that is contribution. Contribution is done. So we'll go with this Roman one. 1 is done. The next one we have is, we'll go with the next one. After contribution, we are supposed to know, that is the second formula, is called as BEP. What is it? BEP. That is called break-even point. What is it? Break-even point. Now what is this break-even point? A particular point where you don't have profit nor you will have losses. This is called break-even point. And break-even point is determined in 2 of the things. That is, one is sales, break-even point sales, and one more is value. That is break-even point units. That is how much amount, if we actually make something, will be in neither loss nor profit, or how many units we need to sell so that we'll have the break-even point. So that's why we calculate in 2 terms. One is BEP sales and BEP units. Now example I'll give you. You have started a business in 2019, okay, and you have invested 1 crore rupees. Now understand, in 2020 January you got that 1 crore back. Now tell me that whether you have break-even point or you don't have a break-even point. Now many of them, they say that 1 crore rupees I have invested, 1 crore rupees I got it. That means neither loss nor profit. But let me tell you here, the entire 1 year you have worked, isn't it? So what is that work? So that's the reason we are supposed to calculate BEP, break-even point. That particular point where I'll meet neither loss nor profit. So let's understand this formula. Now when we go with this BEP, we should also know something about a profit volume ratio. What is that called as? Profit volume ratio. So what is profit volume ratio? Now profit, we already know what exactly profit is, right? Now what is this PV ratio is all about? So we have the third thing that which we are supposed to know is P/V. PV is written in P/V ratio, PV ratio. And this ratio is always determined with percentage. So whenever we calculate, it is calculated according to the percentage. So this is the first hint which I'll give you. The thing is, PV is always calculated on percentage. So wherever you get percentage, that is the PV ratio. Now, what is this PV? That means there is a relationship. Now, what relationships we are talking? We are talking about the relationship between contribution and sales. What is it? Contribution and sales. So, to know the relationship of contribution and sales, we have something called PV ratio. So, what is this PV? PV is equal to C by S into 100. What is it? PV is equal to C by S into 100. So, C here means what? Contribution. And sales, you know what exactly the sales is. In that month, how much was the sale? In that year, how much was the sale? So the total sales which we are supposed to calculate. So PV is equal to C by S into 100. So here, students, we will not take the BEP formula right now. Through PV, we will actually go with BEP. Now understand. Through this, can I write few more formulas? Now understand. PV formula. Can I have more formulas? We need to understand this. Contribution is what? Sales minus variable. Contribution is fixed plus profit. Now what will I do is, I'll write here. Can I write S minus V divided by S into 100 for PV? Because C is what? Contribution. Contribution is also written as sales minus variable cost. This is one of the formula. This is the second formula for PV. And the third formula is, can I write F plus P divided by S into 100, because this is the third formula. Now what is that I have done is, I have substituted contribution. Contribution is also equal to fixed plus profit divided by S into 100. So here also it is what? P/V. This is also P/V. So we have the third formula, which is PV ratio. Now what exactly BEP is? Now break-even point, we have two which I told you about. One is sales, another is unit. So here, how to remember this? We have something called ACT. ACT. What is this ACT? That means Abhilash Chandra tricks to remember all the formulas. Now we went with two of the formulas. The first one is contribution. C is equal to S minus V. And C is equal to F plus P. And we also got to know about PV ratio, where I told you what is the PV ratio means, a relation between the contribution and the sales. Here we got to know the formulas. Now we are with the next one, that is the BEP. Now BEP here is equal to, now draw denominator numerator combination. Now what exactly it is? In BEP, you are supposed to go with, here the denominator will be PV. The denominator is what? PV. Now PV ratio, that means it will always be in percentage. So here we have, that's why we are supposed to multiply with 100. Now PV is in the denominator. Now what will come in the numerator? What will come in the numerator? Now understand the logic here. There are these words BEP, go with the middle one, that is E. After E, which alphabet will come? F. Now that means fixed cost. What is it? Fixed cost. Now it is fixed cost divided by PV. What is it? Fixed cost divided by PV. That will become our BEP formula. Now here we have one more. Now I have written here third. Now I'll write here the fourth one. We have something called MOS. is equal to. Now what is this MOS? Margin of safety. I'll write it here. MOS means what? Margin of safety. Margin of safety. Now what is this margin of safety is all about? Understand. B.B. neither loss nor profit. But here margin of safety means I should at least make profit so that I can survive for the next year. That profit which I need to go, that is at least that much profit. That is called my margin of safety, where I can survive even if the next year I don't have any sales. See, business is unpredictable. You don't know how much you are supposed to sell, how much you are supposed to make. We don't know because unpredictable it is. But I should calculate my safety being in the business. So that's why we should know that if I sell this much, I'll be safe. That is the reason we go with margin of safety. Now here also students, the denominator numerator combination you go. And you write here the denominator is what? PV. What is the denominator? PV. Now here, same way, the middle alphabet is what? O. After O, what will come? A, B, C, D, E, F, G, H, I, J, K, L, M, N, O. O after that, P. P means what? Profit. P means profit. So hope you people got the formulas of it. BEP you got to know, MOS you got to know. For BEP and MOS, what is that you should do? Profit by PV. So MOS is what? Profit by PV. Now we got to know 4 formulas. One is contribution, another is PV, the third is BEP, and the fourth is MOS. Now for BEP and MOS, what is it? Common is simple. Denominator is same, PV, PV. Now how to remember? E. After E, what will come? F, fixed cost. After O, what will come? P, profit. So this is how we will remember the formula. So let's go with the question paper problem only. I'll tell you this is what the 15 marks question which had come in 2016 question paper of University of Mysore. Only through 4 formulas which I told you. One is contribution, PV ratio, BEP, MOS. We will be able to take 15 marks, that is 15 of 15. Let's go with the first question, and I want you people to have your calculator, your notebook, your pen. Let's go with the question. Understand the question. The first is a company producing a single article. There is a company which is producing a single article. It sells at rupees 100 each, that is selling price. Selling price is how much? 100 rupees. Done. And marginal cost, I told you here, marginal cost is also known as variable cost. Marginal cost is also known as variable cost. Of production is rupees 60 per unit. That means here, variable cost is how much? 60 rupees per unit. Here also per unit. And the fixed cost, now we have what? Fixed cost is equal to 40,000 rupees PA. That means per annum. That is for one entire year we are actually giving 40,000 rupees as fixed cost. So fixed cost is how much? 40,000 rupees. Chalo, done. So we are supposed to calculate all this. PV ratio, BEP, sales, profit, new BEP. Let's go with one by one. Let's understand what the question is, right? Now there is a company which is selling an article, and that article is worth 100 rupees. That means selling price is 100 rupees. They have not given how much they are producing, how many things they are actually manufacturing. They have not done it. We don't need it. We just need to know what is the PV ratio. The first one which we are supposed to know is what? The formula. PV is equal to, what is it? Sales minus variable cost divided by sales into 100. But here it is selling price. The first thing which we need to know is PV can also be calculated if selling price is given. That is for 1 unit how much. And even we need to calculate PV if the variable cost per unit is also given. We can calculate it. How will we calculate? Let's go with the formulas now. Now the solution here. We got to know that we have selling price is 100 rupees per unit. Then we have fixed cost, that is 40,000 rupees. Then we have variable cost is equal to 60 rupees per unit. Done. So these are the given things. You just write it in your answers. These are the things which are given. Now we need to calculate what the first one is, PV ratio. I'll write here. See, step marks, you will definitely get more marks because it's a 15 marks question. Okay. Now, PV is equal to, what is PV is equal to? Now contribution we had no. That is PV is equal to, it's a relation between contribution and sale. Contribution divided by S into 100. Write the first formula. Now, PV is equal to, now I told you the contribution formula. Can I use S minus V by S or F plus P by S? Now here they have not given us profit, they have given fixed cost. That means I can't find two unvariable, right? So what I'll do is, I'll go with the first formula, S minus V divided by S into 100. Why into 100? Because in PV, we calculated for 100%. That's why it is called ratio. Now, here what happened? Selling price is how much? 100 minus, now V in the sense variable cost. Now variable cost, they have actually said marginal cost is 60. I know that, and we all know that marginal cost is also known as variable cost. 100 minus 60 divided by 100 into 100. So this ones are. Now we have how much? 40. Now it is always denoted in percentage. Please never write just 40. You are supposed to write 40%. See, there is a lot of difference between 40 units, 40 rupees, 40%. And when you go with only 40, what happens is you're not giving a value to it. So this is the PV ratio. So we got the first question, that is PV ratio is equal to what? 40%. So we are done with the PV ratio. Now what exactly the next question they are asking us? They are asking us break-even sales. That is the break-even point in that sales. Now I told you what exactly the formula is. Let's go with the formula here. BEP is equal to, now in the denominator I should write what? PV. Now what is here? E. After E what will come? F. F means fixed cost. So it is what? Fixed cost by PV. Here only we'll go with the fixed cost by PV. What exactly fixed cost is? Here they have said, now BEP is equal to fixed cost by PV is equal to, fixed cost is 40,000 divided by, now PV is how much? I have calculated PV here, right? Now PV is how much? 40%. So I'll write here 40%. Many of my students, I've seen them doing mistake in the regular classes, though now we are taking the online classes. I want you people to know that many of them, they usually write 40,000 divided by 40. So there is a difference, 40,000 divided by 40. You should always go with 40,000 divided by 40% because PV is not 40, it is 40%. So be very careful when you go with 40%. Now we'll calculate 40,000 divided by 40%. Now I got 1 lakh rupees. So my BEP is how much? BEP, that is sales, is equal to 1 lakh rupees. See, you need to write the rupees. If you don't write rupees, just writing 1 lakh, it will not be the correct answer because I told you 1 lakh unit is different, 1 lakh rupees is also different. You should always give value to it, what value it is. So BEP sales is how much? 1 lakh rupees. So we are done with the second question also. The third question and the fourth question I'll teach you in a different way. So here they said that sales to earn a profit. Now here, let me just erase everything now. Now, sales to earn a profit of rupees 50,000. What will be the thing? Now, understand the question. Sales to earn a profit of rupees 50,000. That means sales, I don't know, but the profit is how much? It is 50,000. So this is what the question they are asking me. That is the question number C. Now when they ask me something like this, I need to always go with one formula, which I say that universal formula kind. Now this is the ACT, Abhilash Chandra tricks, which you are supposed to know. Whenever you get a question that is sales to earn or profit at sales. So these are the two questions which are mandatory in marginal costing. They'll definitely ask you. For both the question, you need to use this formula. The formula is very simple here. What is the formula is? PV is equal to F plus P divided by S. This is what the Abhilash Chandra trick is. That is PV is equal to F plus P divided by S. If you write this, now this is your fifth formula. I told you in marginal costing only through 5 formulas we can take all those 15 formulas. So this is the fifth formula. It's called the universal formula according to me, which I say that PV is equal to F plus P divided by S. So for both the questions, we are supposed to use this formula. I'll tell you how to use this formula. The first one, I'll write here PV is equal to F plus P divided by S. Now understand, though we know that PV ratio formula is this into 100, but already we have calculated PV ratio. That's why we are not writing into 100. If we are supposed to find PV, then we will go with 100, but PV is already found, isn't it? How much is the PV? 40% is the PV. Now we'll write here 40% is equal to, now fixed cost. How much is the fixed cost in this question? The fixed cost is 40,000. Now fixed cost will never change. Fixed cost, that is total fixed cost, will never change. Whether profit increases or sales increases, my fixed cost will never change. That's the reason I'll go with the same fixed cost, that is 40,000. 40,000 plus. What is the profit in this question number C? They have given profit is 50,000. So when profit is 50,000, what is the sales is what they are asking me. What is the sales is what they are asking me. Now sales, what I'll do is I'll move sales to the left hand, and whatever is in the 40% in the left hand, I'll move it to the right hand. So when it happens, what happens is here sales is equal to 40,000 plus 50,000 divided by 40%. Now you should tell me what is the sales, calculated, and you are supposed to put it in the comment box how much sales we have got. So if I need to tell you here is sales is equal to 40 plus 50 is how much? It is 90,000 divided by 40%. If you go with it, we will get sales. Let's calculate here. 90,000 divided by 40%. Now we have 2,25,000. So sales is equal to 2,25,000 rupees. Now please write this rupees. So I'm done with my sales column also. Now we'll go with the next one. Profit at sales rupees 3 lakh. How much? Profit at sales rupees 3 lakh. That means what? Again, I'll delete everything here now. Okay. Now the D part. They say that profit at sales of rupees 3 lakh. That means sales is how much? Rupees 3 lakh. So what would be the profit? This is what the question they are asking. We are supposed to write it like this. Again, same thing I told you. That is Abhilash Chandra tricks. What is it? PV is equal to F plus P divided by S. See, whenever you have any problem, you use this formula, you can find anything and everything. You can even find fixed cost if you know profit and sales. See, with this one formula, I can estimate PV if I multiply it with 100. If I already have PV, I'll not go with 100. Now, if I know profit and fixed, I can actually find sales. If I know sales and fixed, I can find profit. If I know any three, That one thing which is missing, we can find through this formula. That is the reason I always say in marginal costing, if there is a universal formula, this is what it is. So I'll go with the formula here now. PV is equal to F plus P divided by S. Now, why will I not write into 100? Because I have already calculated PV. My PV is what? It will not change. That is 40% is my PV. Next is equal to, what is my fixed cost? My fixed cost is here. Whether the profit will increase or sales will decrease, whether sales will increase or profit decreases, my fixed cost remains same. So it will not change. 40,000 plus. Now I don't know P, I don't know profit, but I know what's sales. Sales is how much? They have only said 3 lakh. I'll write here 3 lakh. Easy. Now what will I do? I'll actually move it here. Now 3 lakh into 40% is equal to, let's go with step by step, okay, is equal to whatever is remaining here, 40,000 plus profit. Now what I'll do is, I'll move this here. Before that, I'll calculate something, which is the 3 lakh of 40%. So what is the 40% of 3 lakh? So here 3 lakh into 40% is 1,20,000. So I'll write here 1,20,000. Now I'll take this 40,000 here minus 40,000 is equal to P. Now understand, from here to here, if I shift here, whatever it is, it will come negative. So it is the opposite thing. When we are supposed to add here, it will be subtract here. So it is minus. Now 1,20,000 minus 40 is how much? That is our 80,000. So the profit will be how much? 80,000. Here I'll write rupees symbol is equal to profit. So that means what? When my sales is 3 lakh, my profit is how much? My profit would be 80,000 rupees. Done. So I'm done with the next format also. So this is how we will calculate sales and profit if this are given. And what is the formula which I use? Abhilash Chandra tricks, which is what you are supposed to remember. PV is equal to F plus P divided by S. Now the last one here is new BEP, new break-even point. Now we have calculated BEP, isn't it? Now what was our BEP? 1 lakh rupees was our BEP. Now for that, what is that we should do is, if the selling price is reduced by 10%, if the selling price, what is the selling price here? 100 rupees. I'll show you the working note. Now please understand, here when we went with, we solved PV ratio. After that, we need to go with what? The last one is BEP. Now, new BEP. What is it? New BEP. How to find the new BEP? They have only said that if the selling price is reduced to 10%. What was the selling price? Now the selling price was 100 rupees. Now it should be what? Reduced by 10%. Now what is the 10% of 100? 10 rupees. So what happens is, the new selling price is equal to 100 minus 10, which is 90 rupees. So when it is 90 rupees, what happens is, now my BEP is what? New BEP. New BEP. What is the formula of BEP? I told you E is there. That means what? The denominator is always PV. After E, fixed cost. We know that fixed cost will never change, isn't it? But PV will change because now the new selling price is how much? 90 rupees. So first I need to find what? PV. PV is equal to S minus V divided by S into 100. Now why am I multiplying with 100? Because I need to know PV. So the new PV, this is also called as new PV. New PV is equal to, sales is how much now? Selling price is not 100, it is 90. So 90 minus V is how much? Now variable cost per unit. Please understand, even in the flexible budget, I have told you total variable cost will change, but variable cost per unit will never change. So what is the variable cost per unit? That is our 60 is what our variable cost per unit. So 90 minus 60 divided by 90 into 100. Please do this. That is, here we will get something called, here I'll just write it here. Now 30 divided by 90 into 100. So 30 divided by 90 into 100. What happens here is 0 and 0, 3 ones are 3, 3s are. So when we go with it, it is 33.33%. 33.33%. Now that is our new PV. The minute I get the new PV, now I need to go with the fixed cost by PV. Let me just erase this now. If you have taken all these things, now we'll write here new BEP is equal to fixed cost divided by PV. Now I know fixed cost is how much? 40,000 divided by PV is what? 33.33%. Never forget to write the percentage. Is equal to, now you are supposed to take your calculator, 40,000 divided by 33.33%. Now I have something like this, that is 1,20,000, 1,20,000, 12 rupees, 0.00 rupees. Now 1,20,000, 12 rupees is what my new BEP if the selling price is reduced to 10%. If it is reduced to 10%, how much is my new BEP? 1,20,000, 12 rupees. So this is what the answer is. Now a quick recall what we have done. I'll go with here. The first thing we went with PV ratio. It's all the formulas which we are going with. Contribution is equal to S minus V. Now we got to know that it is also equal to F plus P. This is contribution. This is the first one which we have done. Now the second one, when we go with, though it is BEP is what we are supposed to calculate, but without calculating PV we can't calculate BEP. So here what happened is, the second one is we went PV is equal to C divided by S into 100. It's always the relation between the contribution and sales. When we go with this, we got to know that contribution we have went with the first one, that is S minus V divided by S into 100. F plus P. So we'll take this, that is PV is also what? That is F plus P divided by S into 100. So we have two of the formula. So this is what the second formula we went with. The third formula and the fourth formula. The third formula and the fourth formula, if you go with this, we have something called BEP is equal to and MOS is equal to. Till now we have not solved MOS. In the next class I'll tell you how to solve MOS as well. Now BEP and MOS both are what? Common is what? The denominator is PV. Denominator is what? PV. What is that we are supposed to do is, the middle alphabet is E, here it is O. After E what will come? F, in the sense fixed cost. Here O. After O what will come in the alphabet? That is P. P means profit. So these are the things which we have learnt, and in the next session I'm gonna teach you more problems we're gonna solve together. Thank you so much. If you have any doubt regarding this, please do call me, please do message us in the YouTube. Your likes, your subscriptions and your positive attitude towards the subject will actually encourage us to do more videos. Thank you so much. I'll see you when I see you.